Is the housing market going to crash, and is it a good time for you to buy a house? Let's talk about it. And if you're new to the channel, hi, my name is Matthew Long, and on this channel, all we talk about is making money, saving money, and how to better invest. For the vast majority of Americans, if you ask this question, is it a good time to buy a house? Most would say, probably not a good time. And why do most people feel that way? So during the timing of this recording, the 30-year fixed mortgage is currently trading at 7.5% with credit score 700 and above. So why does that matter? Well, the Fed's entire mission with raising interest rates as they are right now is to curb inflation. And one of those things is getting housing and rents down. So with higher interest rates, that diminishes the buying power for a lot of buyers out there trying to find housing. And at the same time, if you want to be a seller to move from A to B, well, you might have an interest rate at 3%, and then to get to your new home, you're looking at 7.5%. That might totally change your decision making to even exit the market to get into a new home. However, many will argue that the housing market could still sustain and continue to move forward, which it very well could, and I hear those arguments too. My one argument against it on this discourse would be, if you start looking at credit card debt, it is skyrocketing. And why is it skyrocketing? Well, for the vast majority of Americans, they are eviscerating their household savings. Actually, at the timing of this recording as well, household savings is at a historic low. And we're starting to see delinquencies in credit card debts now too. And why? Well, if you go to the grocery store, if you're trying to buy a car, anything, just trying to take an Uber, everything is so outrageously expensive today. So that is killing budgets, it's killing savings, and it's racing up credit card debts. If you add this to also unemployment, the Fed's entire mission is they want to get cost-push inflation down. So what does that mean by that? They need to get employment down and they need to raise unemployment. So I think the only reason that housing is stabilized or staying relatively stable is because you have such a strong, robust job market and no one's really losing their jobs right now. But I tell you what, if the unemployment rate continues to go up, which it very well may do if we're going and heading into a recession, if we get higher unemployment figures quarter by quarter, those people who are holding out with those low interest rate mortgages at a certain point, unfortunately and tragically, they will have to let them go and sell those homes. And causing more pain is for younger folks out there who have student loans. Well, all of a sudden the emergency period is over and now student loan payments will start to come back into play. And if that does happen and you already have high credit card debt and your savings are already super tight, things could start to unravel quite quickly for housing. So keep that in mind. So should you buy a home right now? Well, if you're a recreational investor, I would say no. Take a pause on that with cap rates rising. But if you're looking for a home for your family, go ahead. Just know that you may lose a little bit of value in the near term, but long term, you should be fine. Just make sure you have a plan. Thanks for watching, you guys.